So we know that early profit taking is one of the main obstacles that stands in the way of traders becoming consistently profitable. We've talked about that plenty of times on this channel. We've even looked at research that has proven that. In this video, we're going to deconstruct the problem of early profit taking and really get into what is actually causing that and what you need to do to stop that from happening in the future. Now, before we hop into the video, my name is Akil Stokes. I'm a Forex trader. I'm a trading coach as well over at tier1trading.com. This is a weekly video I do here on the YouTube channel. Lots of content here on the YouTube channel for you to watch. So if you're new, make sure you hit that subscribe button. If you are a returner, I guess if you're new as well, hit that like button, show me some support. So we know that early profit taking is a problem, and the reason why that problem exists is because of fear, right? Greed and fear are two of the biggest emotions that occur to us in life, but in trading as well. And they are the root of most of the mistakes that we make. So when it comes to early profit taking, it's fear. A trader sees the move going in their direction. Once the move is going in their direction, they assume that they're in the money. Here's a secret, you're not actually in the money until the money is in your account, but we feel like we've made something. Then for some reason, maybe the market takes a little bit of a breather, a little bit of relief. We see that profit that we had start to go away, and we get very fearful that we're gonna lose it all. So what is the action that we take when we're fearful of potentially losing it all? We're just gonna take whatever we have right now and take our win while we're ahead. Now, for many of you guys, that may seem like a good thing, right? The old saying, which is stupid, by the way, you can't go broke taking wins. You can, and we'll talk about that a little bit later. But fear is what causes that initial reaction, that initial need to get out and survive before things get worse. Now, the question is, well, why are we fearful? Well, fear comes from lack of confidence. The only time that we are fearful, whether it's in the market or whether it's in life, is when we are not confident about something. Imagine yourself standing in front of 1,000 people giving a speech on something you're not really confident about, maybe a subject matter that is strange to you. How good do you think that speech is going to be? Do you think you're going to be a little bit fearful on stage, shaking and nervous and a lot of ums? Probably, because you lack confidence, and that lack of confidence will show in your actions. So why do we lack confidence? Well, we lack confidence due to lack of preparation, right? Going back to the same example about giving a speech. If you are someone that just decided to give a speech a couple minutes ago, you've done no research and you're not really an expert on the subject matter, you're going to be fearful, right? You're not going to have that confidence. However, if you are someone that planned this speech in advance, you did your research, you prepped, you rehearsed, you have more confidence, you're going to be less fearful, you're going to deliver a better speech. The same thing goes for trading, right? If you have not done the prep work, which is necessary to develop as a trader, you're not going to have confidence in what you're doing. If you're not going to have confidence in what you're doing, you're going to be fearful when the market throws you one of those curveballs. When you're fearful, you're going to make a fear-based mistake like taking profits early, and boom, there you have it. That's why this error happened. Now, I bring this subject up because we had a great opportunity this week of a trading opportunity where, well, let's just say I got feedback from both parties, those who took profit early and those who stuck to their guns, and the results are obviously massively different. If you were involved with us in any of the live streams or the live room this week, you're gonna remember on Thursday, I think it was, we had a lesson on complex pullbacks on oil. You can actually see the opportunity in front of you right here. We're looking for a complex pullback, double bottom, and a chance to trade it up. And I got a handful of emails regarding this. Obviously, some were very excited. Some traders were saying, hey, Akil, thanks for the idea. Made a lot of money. It's going to be a great weekend. I responded to them. Don't spend it all in one place. We had a few others that were excited for the wrong reasons. They made some money out of it, but they admitted to taking targets early. And the coolest email I got came from a trader who made money but was upset because he made a mistake. Now, if you're new to the channel, we classify trades into two categories, right? There are either, I guess, four categories. There are winning trades, there are losing trades, there are good trades, and there are bad trades. Normally, we associate Good trades with winning trades, losing trades with bad trades. But the truth is, good and bad have more to do with the process, right? Process over outcome. A good trade is a trade where you followed your rules 100%. You did not self-sabotage. You made no mistakes. A bad trade is every other trade, one where you didn't follow your rules 100%. And the email from the trader was exciting because he said he was in the oil trade. He punked out. He took profits instead of up here at a retest of the highs. He took profits right after this red candle. So let me zoom in some for you guys if you can see this bad boy here, right? Entry was right down here. We went up. As soon as this red candle came, he got scared that he was going to lose his money, and he took profits there instead of taking his initial profits. I believe his initial profits were at the highs and not an extension, but yeah, I think it was something like this, right at the highs for his initial profits, right? So you can see he left he cut his profits about 50%. And in the beginning, he was excited that he made money because he hasn't really been a successful trader. So he decided that he made money. But after he saw the continuation of the trade, he realized the error of his ways. And this is so important because so many new traders won't even get to that point, right? There are really two classifications of traders. There are traders who are struggling and have no intentions of getting better. There are traders who are struggling and have every intention of getting better. The trader that is struggling that has no intention of getting better, they'll take this, they made profit, they'll tweet about it, they'll do an Instagram video or a TikTok dancing about the Forex money they made or the commodity money that they made, and continue to make the same mistake over and over again. And again, if you follow this channel, you know kind of how we talk about probabilities and risk reward. We have this graph where we talk about the relationship between risk reward and win percentage, and knowing your probabilities, and when you know those probabilities, you'll know where you lie on that graph. Well, if you're self-sabotaging, you can just rip that graph up because it's going to have no purpose to you. And traders that are just excited to make money but don't realize they're sabotaging themselves, well, they're headed for disaster. They're just going to be in the same boat of always being break even or just slowly bleeding their account while thinking they're doing good because they're getting wins. In reality, the wins aren't making up for their losses, and that's how they get into that situation. But the trader I spoke to was excited. Well, not excited, but he was admitted his mistake. He said he got out, he was fearful, realized the error of his ways, and it was so cool to hear that because this means this trader is judging himself based on the process, not the result. Yeah, he made money, but he didn't do it the right way. He didn't make as much as he could have made, and he knows that this is going to hurt him in the future. So it's awesome to see that. And it reminded me of the game-changing trade that I had in my trading career. This was a very long time ago. I was a habitual early profit taker along with many other mistakes, but there was one trade I had on the New Zealand dollar, and I was trading with a group at the time. We weren't trading all together, but we were kind of in the same live room together. We were learning together. Many of us took the same trades because we had very similar styles. And I remember a trade triggered on a Thursday. The whole group took it, and Friday came. It was up like 50 pips, and more than half the group took their money, right? And for some reason, I was probably being stubborn. For some reason, I decided that today is the day I'm actually going to follow my rules. Usually I would take, on a Friday, weekend trading, let's take my 50 pips and go enjoy the weekend. This time I said, you know what? I'm going to stick to it. I'm going to prove my mentor wrong. My mentor always says, stick to your plan and all that fun stuff. We're going to wake up Monday. It's going to get gapped. I'm going to lose money, and I'm going to yell at I'm going to have a sternly written email from my trading mentor. And to my surprise, the exact opposite happened, right? Monday came around. We ended up going up to our first target, which I think was 400 pips, and our second target was 600 pips later in the week. And I remember when we came into our training session on that Monday, my mentor asked the group, he said, how many of you guys took profit on Friday? And again, like 75-80% of the hands went up. And he just laid into him. He was military. He's that type. But it was the first time that I actually followed my plan. The first time I actually followed my rules, and I was rewarded for it. And it really helped flip that switch of being results-based versus being process-based, right? And again, going back to the graph I showed you guys earlier, it's very important that we understand that no individual trade matters, right? Taking profit on this one trade is not going to be, the make or break of your trading career, right? It is about the accumulation of different trades over a long period of time. It is about sticking to your probabilities, sticking to your average risk reward, sticking to your average win percentage, and letting those numbers work out. If you form good habits, right, the probabilities are going to work in your favor. If you form bad habits, the probabilities are going to work against you. And the question is, what side do you want to be on? Now, I told you earlier, there's one last thing that you have to do to make this change. We know that taking profit early is a problem. We know that it's a problem caused by fear. We know that fear is caused by lack of confidence. We know that lack of confidence is caused by lack of preparation. Well, the main step, and this is, easier said than done, is when it comes time to take action or not take action, you have to actually do it.
Do it! Just do it! Don't let your dreams be dreams. Yesterday, you said tomorrow. So just do it! Make your dreams come true! Just do it! No, what are you waiting for? Do it! Just do it! Yes, you can! Just do it! If you're tired of starting over, stop giving up.
And the question you have to ask yourself is what side of trader do I want to be on? Do I want to be that trader that is struggling, but I continue to make the same mistakes, right? What the definition of insanity is, doing the same thing over and over again and expecting a different result. Do I want to be in that category, or am I going to make my way over to the other category, the trader that makes a difference and starts taking the right actions? Either sits in the trade and lets it play out the way that they thought it would, or they refuse to, they refuse to take profits early when they get that urge to do so. So at the end of the day, you got to take action or not take action, depending on how you see it. That is going to be the main difference that separates you from struggling or succeeding. So let me know what you guys think in the comment section below. If you had any struggles with this, if you have any tips for newer traders who are struggling with taking profits early, it is a very hard thing to deal with. I don't want to oversimplify it. It is very difficult, but it's also very necessary that you fix it. So if you're an experienced trader and you have any advice, leave it below. Maybe I'll read through it and I'll turn it into a Trading Coach podcast episode as well. But let's hop into the charts. I got a few new trading opportunities for you to look at this week. As always, we had a busy week last week. I had a very busy week of trading. A lot of the analysis that we did in last week's weekend video came to fruition, which was pretty cool. And before we get into it, just a shameless plug. If you guys are new and you want to learn some information on trading, head over to www.tier1trading.com. We got a bunch of cool content over there. We got some software you can download, some training courses you can take, some workshops you can view. And of course, we have a great community of traders that you can chat with and kind of link up with to be accountability partners and help you on your path to becoming a consistently profitable trader. Help you stop making mistakes like the one we talked about in today's video. All right, let's hop in, see what we have on the radar for this week. All right, so let's start here on the pound dollar. Pound dollar is an interesting one because there's a handful of predictions here depending on if you're looking shorter term or longer term. We're going to focus on more of the longer term prediction here just because it's the weekend video. We try to take a longer look at things since not all of you guys watch this right away. But what we have here in the pound dollar is a head and shoulders bottom. I'll go ahead and draw this into you. And this is a classic reversal pattern in the market where we dive down in a directional move. We get a little bit of a retracement that ends up being our left shoulder. We get a shorter extension to the downside that ends up being our head. We get a deep retracement back, giving us a neckline right here. And then we have another period of consolidation or a failed extension being our right shoulder. And what we would expect from this formation, if the neckline is broken, is a continuation up. And if we were to continue to the upside, I would expect to move to $1.30. Now, if you remember, we are currently fighting off a very important decision point here in the market. We've spoken about this in our last few videos, but if we look left, structure leaves clues, you can see we're coming to a nice previous level consolidation. So there's no surprise that the market decided to stall here. But if we can work our way up and violate this level to the upside, there's room from really 126.70s again up to about 130s. And if we dive down to a lower time frame, things get a little bit more interesting where we have another head and shoulders pattern essentially in the opposite direction, right here. If I draw this in, yep, sloppy a little bit, but you guys get the point. And if we can violate this level, I would expect to move down here. But the point I want to bring up to you guys here is if you are someone that likes to trade the aggressive shoulder. We do have some rules for that, and this one doesn't necessarily meet the rules for trading the aggressive shoulder. Talking about the bullish opportunity, unless you are down here on the 4 hour. Let's actually see this. It doesn't meet it on the daily, but it actually would meet it here on the 4 hour with the break and close below there. But if you are someone that's interested in trading the aggressive shoulder, I would pay attention to how price action reacts at this level. Again, this has been a pretty decent area of structure in the past. Again, we could look left, structure leaves clues as well. It'd be very interesting to see if you can get a reversal reason, meaning price action gives you, sorry, I'm trying to do two things at once and look for risk reward. Price action gives you a signal that we're likely to reverse. It'd be interesting because if you get an entry opportunity here, you can have stops right below the sneaky low right here. And you can look for targets in multiple levels. One, you can look for a retest of the highs right here just to be conservative. But bigger picture, again, we can look for either this intermediate level of structure here as well at about 127.60s, and of course that higher level near $1.30. So this can end up being a very good trading opportunity risk reward wise if we get that reversal reason at those lows, and if this situation meets your rules for being an aggressive head and shoulders trader. Up next is going to be the pound yen. This is just going to be a recap from last week. We had a handful of patterns on the radar in last week's video. We had a lot of them play out. I had, 5 trades last week. 4 of them were pattern trades. Not all of them worked out too great. Had a few losses. Thank you, euro yen and pound yen. But another opportunity is here on the 4 hour and daily chart. This is one we looked at last week where we had both the bearish butterfly and the deep bearish Gartley pattern completing at essentially the same area. So you can see price ended the week with a very nice candlestick combination. We approached our entry, we hit our entry, I should say, ended up with a pin bar and a lower low, lower close combination. That is a positive sign for anyone looking to get bearish. Pay attention to the open on this because it still may be at entry, or we may come up and double top and give you another shot at getting involved if you are someone looking to get short here in the pound yen off of an advanced pattern formation trade. Lastly is going to be dollar Canada, the loonie. We're actually teasing about this on the chat on Friday about how wacky this pair has been. I said that's why they call it the loonie. And I say it's been wacky because we've had some very good bearish trend continuation opportunities set up from an analysis standpoint. However, with how the market has moved, it has just given us the most disgusting movement ever, right? I'll give you an example. Again, if you're following these videos, you're going to remember most of these opportunities, videos, or these live streams where we look for continuation. So we had a lower low, lower close right there. We look for a pullback and a chance to continue down. Now, ultimately, price did exactly that, right? We pulled back into previous structure highs right below 127s and dove down all the way to 125.5s. But if you look at the actual tradability, if that's a word, of this, there was never any opportunity to trade. The pullback was a very nasty, sloppy one, just more consolidation than anything. And it didn't really give us an opportunity to trade it. And it looks like we're setting this up again. So you can see that price action just put in a lower low, lower close. If you're familiar with our rules on how we identify a trend, how we make predictions in the market, lower low, lower close equals a prediction of a bearish continuation. The next prediction is, if we're going to continue bearish, where are we likely to continue bearish to? Look left, structure leaves clues. We got a nice structure level right down here around $1.25. I would certainly predict that we're likely to continue down to that level. So how do we get involved? Well, we look for a pullback and a chance to get short. But depending on how price moves, you may or may not get that. And right now we've just kind of stalled off. And, if we get a direct move up, maybe that may offer an opportunity. But if it moves anything like in the past, it's going to be very hard to operate, for me at least, when price action gives us this movement. So I do want to bring it up to you guys because I think it's a really good opportunity, especially if we retrace to 126s. There's a lot of room to the downside, 100 pips. But you're going to have to find within your trading plan and your rules of how you can trade this. Because again, if it continues to give us moves like this, it's going to be very difficult to navigate. But that is on you as a trader to figure that out. I can't answer that question for you. All I can do is show you the opportunity at hand. And well, this is another good one.